everybody in a partnership on a bigger deal brings some type of value to the table, right? Otherwise, they wouldn't be there for the most part. And the three main areas that you can add value to a real estate transaction are going to be the acquisition, so understanding how to find and analyze a good deal. The finance aspect, understanding how to actually put the capital stack together, whether or not it's a good or a bad deal. How would it get funded, and what would the returns look like? So understanding the finance aspect, and then the construction. So if there's an analysis that depends on hypothetical valuation that requires construction or development, well, somebody has to actually know how to execute on the construction.
Welcome to the Kaizen Blueprint podcast, where we explore topics for continuous personal growth and improvement.
Welcome to the show, Sam. How are you?
Good. Thanks, Anna. How are you?
Good. I want to dive deep here because we both in the real estate market, and it's been a crazy past few 18 to 24 months. Interest rates are pretty high. How do you feel about the current market trends right now?
Yeah, I mean, it's really depends who's asking and from what perspective, but it's an interesting time for me seeing what's happened in the brokerage side of the business as far as transaction volume. It's been broadly cut in half, which sounds bad, but it's more so, from my perspective, interesting to understand why that happened, how and where it goes from here. So for me, it's been a learning experience more than anything else. There's challenges, but there's still opportunity for growth. And so I'm still excited to be in the business, but it's been a whirlwind of a learning experience the past couple of years.
Yeah, absolutely. Now tell us more of how did you get first started? Because we talked briefly before, the podcast and a recording. You have a very interesting background coming from nursing, and you could talk more about that and then dive deep into how you got into real estate.
Yeah, sure. I mean, the funny thing about real estate is I find most people I meet were in something else unrelated before getting into the industry. It's somewhat common. So like many that I've met, I started in a non-real estate industry. I was in clinical research, actually, not nursing, but the University of Pennsylvania was the first job I had out of college, and was working in a research lab as a tech on clinical research trials, and stayed there for maybe 4 years. I was at UPenn total, and then decided I wanted to get into real estate and be an entrepreneur. So I sort of quit my job without a specific plan of where I was going or how I was going to make money, but that was my path, and I started going out to networking events in Philadelphia. I mean, that's the great thing about being in a somewhat big city. Philly's kind of a small, big city, but big enough that there was opportunity for me to meet people, go out to events, and get a foot in the door of the real estate industry just by nature of talking to people and networking.
Yeah, we're definitely going to dive deep into the networking aspects in the show, but just transitioning out of that, like being in research for UPenn and transitioning into, you just quit your job almost immediately, and then I said that I want to be in real estate.
Yeah, I mean, I'm sure I don't remember the exact timelines of how long it took me to work up the the courage and plan it out, but I just had a few side hustles, I guess is the word, going on, side businesses. I had saved up enough to feel comfortable for a few months. And, again, I was maybe in my late 20s. I didn't have kids, didn't have a lot of life overhead, if that makes sense, putting it that way. I had purchased a house that I lived in and had roommates that were essentially paying me rent / covering my mortgage. And so my life overhead was pretty low and inexpensive. I didn't have a car, again, no kids, no pets, nothing.
Wow.
So I really felt confident enough, having only a few months of runway, to just quit my job. Not everyone is going to be in that position at any given time. I decided to take advantage of it while I could. It doesn't mean it was perfect. It was certainly stressful and probably not the smartest decision, but it worked for me, and I wouldn't go back and change anything.
Yeah, absolutely. I think once you start getting that W-2, getting that stability, now you're hunting. You're looking for new opportunities, maybe dedicate a lot of time into it, and just take a huge risk, right?
Yeah.
And within that real estate, you said you saved up a lot of money or somewhat in a frugal lifestyle here. Do you have any recommendations for someone that's want to start saving and maybe start their own business?
Yeah, I mean, interestingly for me, I think one day I was browsing online. I forget exactly what I was looking at, but I came across a blog that was a pretty introductory 101 into personal finance. And I think that's the best place to start is before you start putting together plans for a business or figuring out how to save or budget for a business, look at yourself first and your own personal finances as if it were a business, and ask yourself, what cash flow do I have coming in, whether that's from a W-2 job or a business, doesn't matter. It's what do I have coming in and what do I spend every month, and what am I saving, what am I investing, how do I grow this, how do I save? And I think the basic fundamentals of personal finance 101, I think it empowers people when you can understand your own personal finance situation. It easily then parlays and adapts into an understanding of how to start a business. And then, of course, there's a ton you have to learn from that point forward, but it gives you a strong foundation and gives you the confidence to say, hey, this is all pretty simple stuff. It's hard, but it's not overly complicated.
Yeah, personal finance, that's part of being a business, right? Understanding your finances, see how long you could sustain a particular business or a business model that you're doing or pursuing. And in reality, I was having conversations with someone, your personal finance, if you have a business, kind of grows into the business or kind of like transfer over. For example, if you're frugal, then you run your business frugal. If you spend so much money on unnecessary stuff, then that will translate into your business as well. Your business kind of like your child in a way.
Yeah, absolutely. A mentor of mine once said, how you do one thing is how you do everything. And so I think that holds true. The way you run your own personal finances is how you're going to run your business finances. And it's true. How you do one thing is sort of how you handle everything in life.
Yep. Any books recommendations for personal finance?
Everyone's read Rich Dad Poor Dad. I know that's cliche to say, but it truly was the first one that I read. And there's so many great ones out there. I think that's probably one of the earliest that I read was Rich Dad Poor Dad. But what is most recently still sitting out on my desk is Never Split the Difference.
Chris Voss.
Yes, Chris Voss. And not so much personal finance, more so negotiation.
Yep.
But I think that's also very universal. Learning how to navigate conversations and negotiate is useful for any aspect of your life. And then The One Thing, Gary Keller's book. Yeah, those two are kind of floating out on my desk right now. Both I have a tendency to pick up books and read a few chapters and put them down, and they're all sitting around. It takes me a while to actually get through, but that's what I have out at the moment.
Well, as long as you're implementing the strategies within the book, that's super.
Yeah.
That's the most impact, rather than reading 100 books and like, okay, just read just to read. But you definitely took a picture with Robert Kiyosaki before.
Yeah, I did. I got to meet him and his wife, Kim,
Wow.
and a lot of really interesting people at a conference in, forget where that was, in Arizona, I believe, a couple of years ago. A lot of fun.
Yeah. I just came back on a cruise and met Ken McElroy, and he's a very interesting person. So it's super fun to see or to have interactions with those high caliber type of people, and pick their brains, because obviously they have a lot of experience, and we're kind of like the young and ambitious trying to figure out things, and like, I want to get where you are.
Yeah, exactly. It's good to have those inspirations, but to your point, it's one thing to read a bunch of books and talk to a lot of people, and then it's another thing to put it into action and convert it. And so that's where the challenge really starts when you start trying to implement. But it's good to have those inspirations and role models out there.
Absolutely. Now, transitioning out from in research for UPenn, then you have multiple properties at the time, and you have this frugal expenses. How did the brokerage come into about? Like, what makes you transition and start a brokerage firm?
Yeah, that wasn't what I jumped into initially. When I quit my job, my intention was to figure out how to sustain myself as an investor. Of course, I find that most will perceive it to be easier than it ends up being, which was me as well. I thought that I'd be able to grow and acquire properties and build up this business very quickly by myself. Of course, that's hard to do. And I realized that I was going to need some other type of stream of income, some way to get started without, in lieu of having a bunch of money to buy a bunch of properties. You know, that was not the position I was in. I was certainly frugal, but I didn't have a ton of money to start with. So real estate is something that, again, I love the industry because people can get into it at any time with any background.
Yes.
Being successful in it is a different story, and it's a lot of hard work and a lot of learning curves to go through, but you can get in at any time, no matter where you are, who you are, how old you are, doesn't matter. You can get started, and it's just a matter of applying yourself and learning, and that's what I liked. I like opportunities to be able to learn and grow and apply myself. And so I started going out to networking events, met somebody who was actually on the wholesaling side of the business, not real estate brokerage, but that was an excellent experience. He was, again, a wholesaler who was looking for someone to join his team and help with the acquisitions and sales side of the business. And that was, for me, a crash course in basic sales 101 and real estate 101. And shortly thereafter, I ended up getting my license. Again, another mentor of mine suggested, go ahead and get the license. That way you have more options, ways to expand. And it sort of grew from there. And I just kept doing what I learned on the wholesaling side of the business. This is basically just a sales funnel. It's waking up every day, applying yourself, doing your follow-ups, doing the basics over and over. I just took that foundation and applied it to my brokerage business. And again, it's really simple. It's hard to execute, but simple in concept.
Got it. For the listeners that don't know what wholesaling is, can you briefly explain what that is?
Yeah, so wholesaling is essentially getting properties under contract as though you were the purchaser, but with the right to assign the contract to another purchaser before closing. And this was a big thing in Philly over the past, I don't know, maybe 5-10 years. Again, I've only been in the industry for 5 years. So at the time I came in, this term wholesaling was everywhere. And I just took it for granted that this was how most people get into this business and start finding deals, finding properties, learning how to flip or do different investing strategies. But before they're able to actually buy something themselves, they start wholesaling in order to build up their network, to learn, to understand the industry, and then once they have enough saved, to start buying themselves. But it's funny, at the end of the day, wholesaling is essentially just putting two people together. You have a seller who wants to sell, you have a buyer who wants to buy, and you make a fee in between for your ability to connect those pieces. And that's really what brokerage is. Yep, exactly. In essence. So they're almost identical, with just the difference of licensure and some other industry standards, but same concept at the end of the day.
Yeah, wholesaling can transfer into other businesses as well. It's buying low and selling high. That's technically what wholesaling is. And I started as well in real estate about 5 years ago, and wholesaling was that buzzword of you could get started with no money down, or just starting in real estate without $0. That's always been a thumbnail and the trend at the time, but now it has gotten a lot more stricter. I don't know if you're aware about the new legislation that wholesaling contracts, the seller can have an appraisal, can cancel any type of contract in 30 days. And then there's the wholesaling license that is required if you are wholesaling without a real estate salesperson license. So what are your thoughts on the regulations now Philadelphia has put into the wholesaling industry? Yeah,
I've heard a lot that it's become more regulated. I never actually technically did any wholesaling. I worked for a wholesaling company for a brief period of time, maybe 6 months, and then and that was maybe 5 years ago. So and I've never really done wholesaling myself either. But obviously a lot of the folks that I know in the industry were heavy in wholesaling at the time and still now. And I do think there's a lot more regulation and challenges. I tend to think people find a way to adapt to things no matter what. So it'll just continue to be here, but in some different way, shape, or form. Again, at the end of the day, you're going to have sellers that need to sell properties, and you're going to have buyers that want to buy properties, and people are going to find ways to make those transactions happen. And whether there's different names that it gets called or regulatory processes or paperwork or, whatever, licensing, people adapt. And so I don't think the concept of properties transacting is going to go away. So I don't think the basic concept of wholesaling will go away, just may take different forms.
Yeah, absolutely. And wholesaling is technically just acquisition, just learning how to acquire properties and selling the properties. It's basically a transaction without any construction, meaning you don't do any handyman work. You're just dealing with a lot of paperwork. You're dealing with negotiations. You're dealing with emotional. And sometimes if you go into maybe commercial wholesaling, you deal with more numbers and commas. And obviously the people are involved in that. And depending on how complex the transaction is, then you deal with more people. But at the end of the day, it's all acquisition than disposition.
Yeah, absolutely. At the end of the day, it's really, it comes down to, well, like you mentioned, there's a lot of aspects of understanding people and emotions and things like that. But there's also an understanding of valuation, understanding what the hypothetical value of a property is, understanding what the actual as-is value of a property is, and being able to understand the different factors that influence those valuations. And that's the part of the business that I like the most. And I think if you have a fundamental understanding of how to value a property and what the different factors are that change, increase, decrease the value at different times, you also kind of fundamentally start to understand seller and buyer motivation as well. It sort of all ties together, and it just becomes a bigger picture of, again, does it make sense for this property to transact at what price point? What do people on both sides want, and is it going to work?
Yeah, absolutely. And speaking of transactions, and we won't dive deep into this because it's going to be 3 to 5 hours of just analyzing deals, but you started having, residential properties on your own. Now you're doing brokerages for bigger commercial properties. Can you tell us the difference between each of them and how has the transition has been between residential to commercial?
Yeah, I mean, I guess like I've heard most say, it's a matter of adding zeros, right? It's all the same thing. Analyzing a single family property to analyzing a 200-unit property, it's really the same basic numbers, and it's just larger versus smaller numbers. I mean, there are some things that are different. Larger deals, may or may not start to have more complicated capital stacks, how the money comes together, rather than one person putting up a deposit and getting a bank loan. Maybe there's different layers of sources where money is coming from. But if you look at the basic structure, you're really just, again, understanding what's the maximum, highest and best end potential value of this property. What is it going to take to get it there? And then subtracting all of that out, what can I pay for the property now? What is it worth in its current state versus its maximum value? And also understanding cash flow, even if there's no ability to add value or force appreciation, which is what a lot of investors are looking for. They're looking for properties where they can increase the value. But there are buyers that want to buy properties where they're just buying for cash flow. So understanding, well, how do you accurately analyze the income and expenses of a property to understand whether or not it is cash flowing, and what does that even mean? So it's just a basic understanding of going back to personal finance, understand understand the in-place cash flow accurately, and then understand as is and potential value. And whether it's a small property or a large property, it's really all fundamentally the same thing.
Right. And when it's for an investor, when I want to start it, right, I'm totally frugal. I know my finances, personal finances. Now, if I want to get to bigger deals, how would I get started?
I mean, there's so many different paths I've seen people take. There's partnerships. There's folks I see who start very small, and with each acquisition, they just aim to go a little bit bigger. So they're taking their own gains and their own money from their first into their second, third, fourth, and 100th. At some point, I think most of the clients that I work with who are developers and investors, at some point they realize there's a cap on how much they can grow with their own money and have to bring other investors in. But I think one key thing to start understanding early is that everybody in a partnership on a bigger deal brings some type of value to the table, right? Otherwise, they wouldn't be there for the most part. And the three main areas that you can add value to a real estate transaction are going to be the acquisitions, so understanding how to find and analyze a good deal, the finance aspect, understanding how to actually put the capital stack together, whether or not it's a good or a bad deal. How would it get funded, and what would the returns look like? So understanding the finance aspect. And then the construction. So if there's an analysis that depends on hypothetical valuation that requires construction or development, well, somebody has to actually know how to execute on the construction, right?
Yeah.
So you have the acquisition side, the finance side, the construction side. And I've heard this from a few other folks, and I like the saying that people are usually good at one, maybe two, but never all three.
Yep.
So partnership sort of comes together from an understanding of who's bringing what to the table. And as long as you can, get your head around what you bring to the table and what you need, I think that's how people start to grow.
So focus on one thing at a time, and then expand on those things. And expand on like kind of your weakness, or partner up with those weaknesses that you're not good at.
Yeah, I mean, and even if it's not a weakness, everyone only has so much time in a day, right? I
Right.
mean, we all have the same 24 hours in a day, and it gets to a point where you can't be a master of everything. You also don't have time to master everything. So partnership is, I think, necessary, but being a good partner is important. Understanding, how do you bring your best foot forward? How do you, make sure that you understand your strengths and your weaknesses, and find
Right.
partnerships that make sense.
Yeah, absolutely. I think in the real estate world, it's money, it's knowledge, and it's hustle. You just kind of made it more technical term
I like that
with the
version
commercial
of it as well, though.
just for the people sitting at home that's just want to get started into real estate, like you got to either bring hustle, knowledge, or money, or
Yeah.
maybe two out of the three, like you mentioned earlier.
Yeah, I like that one.
Yeah. And speaking of people, you network a lot, and I really admire how you're out there and going to these networking events and be speaking in some of these events as well. Can you take us back into when you first started networking? How has that been? Did you already knew some of the stuff? Did you already know that the people that you're going to network with, that you already have friends in the industry?
No, I really didn't know anybody in the industry. I don't have any prior connections or background, no family friends really in the industry, but it was something I decided I was going to do. And I guess, one strength that I have is I know how to walk into a room with the energy that I'm here to talk to people. I'm approachable. You can come up to me, or I'm going to come up to you. One way or the other, I'm going to have conversations with people. I'm not afraid to. I wouldn't consider myself the absolute most outgoing person in the world, but if you can learn how to turn that energy on and off, I think that's really important. You can go to any number of networking events, but if you sit back in a corner and don't talk to anybody and don't look approachable, you're probably not going to get as much out of it. The content and the information, say you go to an event where someone's speaking, that's all very valuable, right? But even more valuable is the time that people spend before and after these events talking to each other and exchanging information. And so, I don't know, that was it. In lieu of knowing anything else, I knew nothing about real estate coming into it. I had no money, to your point. There was only so much that I could bring to the table, but I could bring the hustle. I could show up with the energy and say, hey, I'm going to talk to a couple people. I'm going to get some people's phone numbers. I'm going to follow up. And so that's really how I got started. And I think that's still what I do to this day. It's hard to maintain those energy levels, but being able to utilize it has been the most helpful thing to me. Everything I owe everything that I've achieved in real estate to people that I've met, and mostly via networking events and referrals and things like that. So
Yeah, absolutely. I tell all my friends this too. It's about the people that you surround yourself with. And when I first started in real estate, I didn't know anyone. And it was a similar concept to what you just said, but I was actually the good guy in the corner in a room. Well, mainly because I was in Nick Tang's and Nick Tang's events, and you probably spoke in some of them as well.
yeah, those were the first ones that I went to.
The one in Hotel Sofitel.
Yep. Yeah.
That was my first one too. And at the time I was like 18 years old. And
Oh my gosh.
I did not know anything about what ARV, rehab costs, what is wholesaling. And I remember before going into the room, I was there super early. I think it starts at like 7 o'clock or maybe 6:30. I was there at like 5:30, 6 o'clock. And I got there. I was at the hotel. I was at the lobby. And before I go to the room of the people there, I was in the bathroom for about 30 minutes, just like washing my face. Like, okay, I got this. Because at the time, the reason why I came to that event was I was in a cleaning business with a friend. And I was kind of like the salesperson and thought that I could bring more people into our business that owns houses. So meetups.com, okay, there's a meetup full of people who are in real estate. Okay, I'll ask them. And as soon as I got in, it was like, oh, super scary, right? A bunch of older folks, and they have a lot of experience talking about DSCR ratio, things like that. Like, I didn't even know what that was. And I just came up to people and was like, hi. And then they started going off the conversation. I was like, oh, so what do you do? I'm like, just a student. But ever since then, that first meetup, I found my mentor, I found capital partners, I found knowledge, and just going there consistently. And I think people can take away this is like, yeah, that first event might be really scary, but if you show up, have the confidence to even just saying hi to random people and just start conversations that way. And it doesn't necessarily have to be about you. It could be just about them, right? The key is to be interested in someone. Oh, yeah, to be interested in someone than to be interesting, especially as a young person who is ambitious and just want to partner up with people. Like, you don't know what values you're going to bring, but you have to understand that these people don't have a lot of time, whereas you have a lot of time and you have a lot of ambitions and dedication into whatever that business is. And that's what got me into working under that same mentor for 6 months. And that kind of kickstarted like, okay, what is wholesaling? What is fix and flips? What is buy and hold? What is bigger pockets? Because once you start networking with these people, that kind of is a shortcut into your success, because they made a lot of mistakes. And at the end of the day, you're able to learn from them. And like you mentioned too, you have a mentor and you're able to just trade questions and kind of shift your strategies around into like, what have they done in the past that I can avoid, or at the same time I can do to manage my own successes.
Yeah, absolutely. And just to have their support, right? I mean, it's amazing to hear how young you were going out for the first time. I probably had, I don't know, 5 or 6 years of working experience already. It was in my late 20s, so getting into real estate was not that that's old. I was still young getting into it,
Still
but
young.
not 18, right? And so very different, and that must have been extremely nerve-wracking for you walking in the first time. But I think it's good to hear, because I've met people who are in their 50s and 60s getting started who are just as nervous as that person who's never had the 18-year-old going out for the first time. When you're new to something, it's scary and intimidating.
Yes.
But the thing about networking events is that I think it's very forgiving, and it's a follow-up game. It's a consistency thing. So you can show up and like recover from a bad first impression. Like the worst thing that you're going to do is say something weird, ask a dumb question. There are no dumb questions, right? But what's the worst that you do? You say something and somebody doesn't like you. Okay, come back again.
Yep.
Come back the next time. And another mentor of mine and my business partner has a saying that people overestimate what they can accomplish in a year, but underestimate what they can accomplish in 10 years. And I think that's an example where that holds true, is that going out to these events is not the expectation that you show up, knock out of the park, make a bunch of money and go home is not the reality. It's the consistency of showing up every time, and the mistakes and times that you didn't do as well as you wanted will be more than made up for by the times that you went and did actually perform well, meet that right person, say that right thing. But it doesn't happen one time. It happens from the consistency of going time and time again, month after month, year after year. You just keep growing.
Yeah, absolutely. And I like to call them the mini deposits of going to these events, because if you're just going to one event, it's a one-off, and they probably just know you at the time and they're like, okay, nice to meet you. But then if you continually showing up and showing your faces and telling them what you're doing or what you potentially want to do, then you start having conversations with people. And I think the most important thing about these events is, like you mentioned earlier, it's not really what happens during the event, but what happens after. What happens after you get that business cards or that you exchange numbers? Are you following up the next day? Are you asking them for coffee or lunch? And that way you could have like more one-on-one interactions, as opposed to be in a room full of people when it's just 5-minute conversations there, then another 10-minute there, and maybe, they got to leave, so then you just got to end it there. So it's very important to do what happened, to just follow up with them, and I think you've done that pretty well too.
Yeah, absolutely. It's just doing the reps, right?
Yes. And that's why I'm doing this podcast too, just having conversations with them, doing the reps and making mistakes along the way. And in terms of networking, how has you kept up to date with the people that you network with?
Yeah, I mean, like you said before, it's not so much what happens at the event, but afterwards, right? And it's just keeping in touch with people. So I just have a very simple CRM to log all of the folks that I've met, names, info. This could be as simple as an Excel spreadsheet and as complex as high-end Salesforce system. It really doesn't matter. It's whether or not you're using it, right? So every single day, the first thing I do when I open my laptop in the morning is go to my CRM and I look at who do I have to follow up with. And this was a habit I built early on. And follow up is simple. You know, I have agents that join my team and people that I train, and I think it's common for the question to be, well, I don't know what's next. How do I keep in touch? What am I supposed to say? What if I say the wrong thing? I don't know how to move the conversation forward. And in the beginning, it's just way more important that you do it at all. Say anything. Call them and say like, hey, how's it going today?
Yep,
And then
yep.
like anything. So phone calls, texts, emails, and in-person meetings. Those are the things that I track in my CRM. And it's more so just the touches, the repetitions. I learned early on that counting how many points of contact you make in a day is really the most important thing you can do. It's just the number. It's a contact sport, right? Sales and real estate, especially the sales aspect of real estate. So it's just getting up every day and looking at my list and checking in who haven't I not spoken to in a while, who's next, and before I leave, before I stop looking at a contact that I have in my list, I say, okay, I sent this person an email. I sent Aldo an email today to see how he's doing. I'm going to say, when's the next time I should follow up with him and set a follow-up task for a week, a month, whatever it is, whatever's appropriate based on where we are in a conversation. And my whole CRM is just full of people that are in any stage from we just met and they barely know me to have known me for years and we've done 20 deals together. Doesn't really matter. They're all in the same place and they all get contact from me periodically. And every single time I come up to their name, I just do my rep and then move them forward. It's very, very simple. It just has to be done every single day.
Now, out of curiosity, when do you pull the trigger on asking them for something?
It's really funny. I think, so I'm not a salesy person. I never have been. That's not really my style. So I find, and maybe I should more often, but I find that I don't know if I really ask necessarily for anything. I more so try to listen to the conversation and look for opportunities within the conversation. So if it comes up, I put out there, well, hey, I could help you with this. I could help you with that. I make offers. I offer to help. I offer to provide an opinion of value, offer to come take a look at their property, offer something, ask questions about what they're working on. And without really having to ask for business, I think it becomes implied that I'm able to help you in certain ways with your real estate portfolio, with your next acquisition, with your next sale. And so I don't know if I look for a time to ask. I just listen and wait for the opportunity to sort of present itself.
Got it. And that's Chris Voss, never split the difference, just let the other people talk, right?
Yep.
And it's not necessarily that you're asking them for something, like you're offering them something, but it's on the opposite end of just let them talk, ask a couple questions, and just honing in into their problems and see how you can provide solutions to those issues.
And making sure they know what it is that I do, right? Like not being afraid. And this is something I've gotten better at over the years, but not being afraid to brag about yourself a little bit. There's a classy way to humble brag about things, right? And talk about the things you're working on and so that they understand where you can add value. And as long as if I leave a conversation feeling like I made it clear what it is that I do, what I like to do, what I'm good at, and I asked a bunch of questions and took notes on ways over the next year that maybe we could work together. That's good enough for me in a conversation. I don't like to be pushy or, ask anybody for something that they're not looking for at the moment. But then it's just a matter of staying top of mind. And more so, most of my lead flow comes inbound to me. So I'll have a client or a contact or referral reach out and say, hey, I've got this property or I've got this, whatever they're working on. But I don't get that unless I do those reps. So I'm laying the groundwork sometimes for a year, 2 years, 3 years with somebody before I get that inbound. But again, that's the difference. I think it's not so much that I have to ask. I just have to be top of mind for as many people as I can. And then, they think of me first when they need something that they know I can help them with.
Absolutely. You develop that relationship and invest in that relationship for the rewards down the line. And I like this phrase, you probably heard of it before. It's not what you do, it's who you know. And I like to expand on that. It's not what you do, it's who you know that knows what you do.
Yes.
And I think that's very important because, yeah, sure, that you know this person from this networking event, but if they don't know, for example, for you, like you handle brokerages, you handle commercial properties, then they wouldn't call you for if they see, for example, like a self-storage or maybe a land that they probably have, like they want to sell.
Yeah, absolutely. That's actually really important and something I learned. I did a lot of building relationships and learning the first few years. But when I always do a review of myself every day, really. I'm reviewing how I performed and did that day. But more importantly, every quarter and every year, I'm doing a look back at what I've accomplished and goals going forward. And at one point, a couple years ago, I realized, I know a lot of people. I've learned a ton. I've done a ton of deals. I've accomplished a lot. But I don't know if I feel 100% confident that the majority of my database knows what I can do for them. They know me, I know them, but I don't know if I've, done enough of making sure they know what my areas of expertise are and what I'm happy to help them with. And so once I started keeping that top of mind, again, it's not like I had to change my entire process. I still am just doing my follow-ups, but now I kept that in my mind that I want to make sure that people, when I'm talking to people, I spend more time explaining what it is that I do so that it's, yes, not who I know, but who I know that knows what I can do.
Absolutely. And well, you've done deals in the past. What makes you think that these people don't know what you're doing?
Oh, I'm saying this was a couple of years ago.
Okay.
So I made that change and I had to implement that. I think it's good to look at what you're doing and yes, pat yourself on the back for the accomplishments that you've had, but then say, what can I be doing better? And that was a point a couple of years ago where I said, what I could do better is make sure that I'm, like I said before, that humble brag, do those little moments where I say, hey, these are some deals that we've done. Hey, here's some things that we're working on, so that it was more clear exactly what my areas of expertise were and what I was doing. Versus, again, there was a point where I felt, wow, all these people know me, but they may or may not be picking up the phone at the moment that they need what I can do because they know me, but not what I do. So that was a moment of distinction I had a few years ago. And it's just good to review yourself every once in a while and ask, what could I be doing better?
Got it. How often do you do these reviews? Is it quarterly?
Yeah,
yearly?
Quarterly. Yeah, actually, my business partner and I do this in a more formal way. I mean, I think it's good to do it for yourself all the time. Just write down goals and think about, the year ahead, the year you've, what you've accomplished. But we actually do sit down and we do, we outline, what has been accomplished over the past quarter, how many sales, how many, what key metrics have we hit. So we're doing a review and then trying to figure out, well, what's the gap? Where do we need to go? And what do we have to, so that you're starting from something. You don't want to constantly be sitting there thinking, oh, I have to start all over. I have to start from scratch. It's looking back at what's been accomplished over the past quarter and saying, okay, that's all great. But what if we bumped this up 10%? What if we added in this one change or made this one, this one nuance here that we could change that might make a big difference. So it's, constantly growing, but building on a foundation, and then setting goals, trying to set achievable, but high, goals so that there's always something to be aiming for and a path to improve.
Absolutely. And now that you're in a brokerage firm or you started your own brokerage firm, what's the difference between your firm versus somebody, let's say I'm a real estate agent or aspiring real estate agent and I don't want to go into the residential. Maybe interest rates are too high. There's not a lot of buyers. Sellers are pricing it way too high and they don't want to sell because of these 3% mortgage interest. But now I want to transition into, for example, like multifamily real estate agent, commercial real estate agent. What makes your company better than, let's say, Marcus and Millichap or Cushman and Wakefield, like these big firms?
Yeah, so we are a very small firm and we are very local. I think that these things help us a lot, having the boots on the ground. That's one of our, buried within our mission statement and our values is this phrase, boots on the ground, having market expertise, right? But specifically local market expertise, meaning we don't just have reports on an entire region and read numbers off of a chart or a report. We do that, of course, sometimes, but more importantly, we actually get out there, we look at properties, we meet with people, we're talking to people locally, so our knowledge is very local to the Philadelphia region, and I think having that boots on the ground knowledge is unique about our group. We also, in addition to being a brokerage, our sister company is a development company. And so we're constantly having that feedback loop between both verticals saying, well, hey, what's happening on the construction side? Where are the challenges? What are things costing to build? What's the timelines? What does permit processing look like? And we're getting that information over to the brokerage side. The brokerage side's able to give feedback to the development side. And so that gives us a nice, unique edge as well, on top of just having that very local expertise.
So more actual numbers when it comes to analyzing these different type of properties.
Yeah, we actually get together once a week as a team and sit down and just on a screen project pro formas for any deals that we're looking at and say, hey, let's take a look at something, let's run the numbers on it, and let's come up with where would this deal work, right? So it's a practice of constantly being able to look at a property and say, there is a number where this would trade, right? Whether the asking price is too high or whether there's any other number of challenges, it's always the exercise and practice of sitting down and saying, well, hypothetically, where would this work? And that is extremely important both on the acquisition side of trying to buy properties, but also as a broker trying to advise my client on whether or not it's the right time to sell their property and at what price it would sell. It's being able to say, well, hey, here's what the buyers are going to say, because I can back down from the top down, exactly what they're going to be looking at. How is this property going to work for them, and where would it trade? And so we do that once per week. We sit down and we really spend a lot of time going over pro formas and understanding the different levers in the pro forma to understand values.
Yeah, it is important to understand the numbers, especially when you're evaluating these bigger deals with bigger commas, right? You want to provide value and information to the client, especially on the acquisition side. Hey, this is what the cap rates are going to be. This is what the value is going to be, things like that. And then once you provide those value, you have some sort of data that's backing it up. It's not necessarily like a generalization of multiple different properties, because every project is very different in terms of construction type, in terms of when it was built. Those costs can vary, but then you're using the development side of your company or sister company, I would say, to expand on the actual numbers. Hey, we're actually doing similar type of deal, and this is what the numbers we're getting from both material and labor costs.
Yep. Yeah, having that real-time data, just being able to, and if you don't happen to have a sister company that's a development company, you can still do this by crowdsourcing, right? That's going back to networking, being able to recognize the power of going out and just asking, hey, Aldo, what are you seeing in terms of costs these days? What are you seeing out there? That data is just as important as any, in fact, probably more important than any automatic generated report that's being circulated out there. That, again, all data is good and bad in different ways, but I think it's never a bad thing to be in that practice of asking people, what are you seeing out there? And we have those conversations with our clients all the time. Again, going back to the CRM and the follow-ups, right? If there's nothing else you can think of, it's, well, hey, what are you seeing out there? And that data that we get from conversations with our clients is so key, especially in a market like this where, again, transaction volume is down over 50%, meaning that just across, in all markets, not just Philadelphia, the number of properties that are selling is less than half of what it was a year ago, 2 years ago. And so the amount of data that you have to determine value is much less than it was. You don't really know what the value of this one property is if you can't point to 3 others that are similar that sold within a year or two. How do you determine the value? It's very hard. But if you're constantly having conversations with potential buyers and potential sellers, even if the property's not transacting, if you're doing that exercise of, well, what offer would you make on this property? Where would you sell this property? And we're getting that anecdotal feedback from so many people about valuations. That's a lot of times all you have to go off of.
Right. And speaking of data, I have this quote here from CoStar. I did the multifamily, and you're in a multifamily, specifically in the Philadelphia market. It says that entering the spring leasing season, Philadelphia's multifamily development remains at historical highs as more than 13,000 units under construction in the region. Over 11,000 units are scheduled to be complete in 2024, translating to 2,000 to 3,000 new units entering the market each quarter. And it talks about rising borrowing costs and a mounting supply of vacant units have discouraged developers from starting new construction projects recently. In fact, construction starts plunged 55% year over year. This slowdown suggests the development boom will likely taper off by the end of 2025. So we have, in the past few years, we have a lot of cranes going up in the center city area, and it's awesome and it's great. And I think that's because of the tax abatement that ended in 2021. Most developers wanted to get in on that, get the tax abatement, and then get the permits to start developing the buildings. And now, fast forward 2-3 years, when most of those set developments are almost completed or incompleted or in lease up or in various form of statuses, we're seeing too much units being delivered now. What do you see at your end? Do you agree on that? And how do you see a lot of developers kind of navigating through that hurdle?
Yeah, it's a big challenge right now to be in the ground up development space. And I think it's firstly a matter of understanding everything that you've just mentioned, right? What has happened over the past couple of years? Why did we have such a surplus of inventory? And what were the factors that started to change and drastically plummet the amount of new starts and the new permits? And there's so many factors, right? The tax abatement was huge in Philadelphia, but this is not just a Philadelphia issue. This is every major metro and pretty much everywhere across the country. Anywhere that you saw a lot of multifamily development and new units hitting the market the past couple of years for all similar reasons, you conversely have seen the same drop off, right? And so there are a lot of units coming online last year, this year, and probably next year, but the drop in starts theoretically will start to help even out that oversupply. I think one thing that's important to realize is that a lot of this oversupply has been delivered in major metros. And so we're starting to see a little bit more of a flight to suburban markets, secondary markets outside of the major metros where rental growth and demand is just as high and still strong. Not everywhere, but in a lot of places, the demand is still there, but the construction has not been. And so I'm seeing a little bit more of investor interest in secondary markets outside of the major metros. And then the other thing to realize is that all of the permits pulled and construction starts, right, that it depends on what data you're looking at, but a lot of sites that got permitted will not necessarily get built now. So you'll see a lot of land and sites that have plans and permits pulled for multifamily that will not necessarily get out of the ground. And then, of course, you'll see less permits getting pulled over the next year or two. So the oversupply, hopefully, in theory, will start to be filled. It will be a challenge for owners holding those assets during this kind of awkward growth phase, right, to get them filled, to maintain paying the debt service, to be able to operate the property. But on the other end of that is a world in which inventory stops coming to the market, the current inventory gets filled, and we reach stabilization again. It's all kind of part of a normal cycle. It's just a matter of whether, how to get from one end of it to the other end.
Yeah. And are you shifting your focus now into the suburban sites?
I mean, our group is still very Philadelphia focused. All of our transactions thus far this year have all still been in the city of Philadelphia. So there's still a lot of investment and interest in the Philly market. But from a ground up development standpoint, we definitely have, I would say, not switched, but expanded our interest into the suburbs.
Got it. Now, we mentioned about multifamily, and what are your thoughts on the buzzword of self-storage that has been in the real estate news of, hey, multifamily market is tough right now. Interest rates are tough. We can't make that debt service to work. Our debt service coverage ratio is under 1 because of increasing expenses, whether insurance, taxes, and we're not. And as you know, Philadelphia, it's what I like to call like a low revenue market. Compared to New York and Boston, we're pretty affordable, I would say, dollar per square foot, that is. But now people are shifting into the self-storage unit where, there's less issues when it comes to evictions, or that, you could have, and this in Philadelphia market itself, these studios are really, really small. And I think with people consuming a lot of things, they probably need a storage outside of where they live in order for them to, have a business or perhaps save some for their family. What are your thoughts on self-storage?
Yeah, it's interesting. I mean, it's been a buzzword for so many years that you would think at some point I would have stopped to look into this more, and I honestly haven't. I tend to try not to get distracted by shiny objects and jump around. I understand multifamily, and I think when you understand one sector of the industry very well, you can still do well in that sector, whether it's in an up or a down. It's by understanding it, knowing what you're looking for, knowing what the moving parts are, that you can be successful in a sector, even if it's in an up or down, phase. So I stick within multifamily because that's what I'm good at and what I know. Self-storage, again, it's been, I have a lot of clients who will call and ask, well, hey, if you aren't seeing any multifamily deals, send me self-storage deals. And I say, okay, I'll keep it in mind, but it's just not something I've gotten into. And I think what's important there, going back to what I said, shiny objects, right? Things can look attractive, but if you don't fully understand that sector, for example, in self-storage, you mentioned less evictions. That sounds like a positive, right? But what is it that we don't know? What about, how long does it take to get them filled up? What really are the construction costs? What do you really have to be buying the land for? And it's not just a matter of, well, it's cheaper to build and there's no eviction, so that means it's better. It doesn't. There's going to be challenges and pros and cons to any property type and any investment vehicle that you use. And I think sticking to one thing and being really, really good at executing on it is better than jumping ship to whatever sounds hot at the moment. That being said, I mean, to your point about people moving into smaller spaces and needing storage, it seems like I definitely agree. There's a trend to building smaller units and people living in smaller square footage spaces overall. We're delivering a lot of new units, but specifically units that are under 600, under 500 square feet, right? So in theory, there's potential downsizing. You have people that may need to put stuff in a storage unit, I guess, in theory. I'll say anecdotally, I've lived in small apartments in Philly for basically my entire life and have never rented a storage unit for any of my stuff. But who knows? I mean, it seems logically to make sense that we would need more of them. But as far as investing in that vehicle, I think if you're going to do it and stick to it and don't jump around.
Yep. Avoid the shiny object syndrome. And as you mentioned in a book that you have on your shelf, the one thing, right? Stick to that one thing. If you're really good at it, just focus on the strength. And maybe if you want to strive out, you can, but just make sure that you're successful at that one investment.
Yeah.
Being a developer is tough. And as you mentioned, the new ground up construction is some people are swaying away from it. Some people are just holding their land until better economic times. Any tips for people who wants to get started in development? Mainly because I'm from Temple University, and at the time, the real estate classes and the real estate courses just came into fruition, and now we have a lot of people interested in being in real estate. And being in real estate, there's so many avenues. You could be a mortgage appraisal, you could be an inspector, you can be a real estate agent, whether that's commercial or residential. You could be even like a handyman and work on tools and fixing houses, and eventually you have your own business of doing fix and flips, for example. But being a developer, you require taking finance courses, you require to learn about construction, learn about economy. What are your tips on somebody who strives to be a developer despite the hard times that we have now?
Yeah, I mean, I think whether it's everything's relative, right? People getting into the industry now may or may not even be aware of how challenging it is right now compared to our experience over the past couple of years. So it's probably almost better not to overthink where things are in the economic cycle. If you're getting in, you're new. You're just getting in. It doesn't really matter whether it's up or down. You're going to have your own journey and your own challenges to face. So it's really never a bad time to to get in. You're always going to have to start somewhere, right? And getting in right now, I really don't think is any different than the time that I got into the industry. It's really just a matter of putting yourself out there and learning as much as you can and executing on what you're learning as much as you can in the shortest period of time. So if you're trying to get into ground up development, but you're not seeing as much of that happen, talk to the developers that you can find and ask, what are they doing right now? Are they, for example, I see a lot of developers land banking, so they still want to be in the development game, but if they can't get shovels in the ground on something right now, they still want to set themselves up with a pipeline for the future. So understand, okay, well, how can I help you? What types of land are you looking for to land bank, right? I'm also seeing a lot of developers do low-income housing and subsidized type of projects because they are not as subject to the current state of the economy. It's sort of a different animal in and of itself. And so there's a lot of, that happening right now. You see some developers switching to more value add multifamily where they're buying existing properties and doing substantial renovation rather than building ground up. But maybe they're still purchasing with intention to develop down the line. I've done a lot of transactions this year where the property had cash flow in place and may have been some type of mixed use or some other type of existing property, but would make sense for multifamily development in a different climate in the future. So it's a covered land play. So developers are always out there doing something. It's just about understanding where they are right now and understanding, okay, what are you looking for and how can I help you? And those are the same two questions you can ask no matter what, part of the cycle in the market that we're in. What are you looking for? How can I help?
Yep. Just learning as much as you can, networking as much as you can, and executing not as much as you can, but executing on the things that you feel comfortable on executing. And I believe in truly, learning a lot and understanding even the simple concepts and going a long way, learning that foundation and networking, right? We talked about it in this episode of how you came to where you are now because of the networks, because of your mentors. And I think the executing part is just as important as the other two too, because we get so bogged down into this paralysis analysis of like, okay, now we're learning so much, we were researching so much, but we're so afraid of just taking action. And I think that taking action piece is really, really important. And especially for younger folks, even just buying a house, it's difficult. It's like, oh, we got to get through inspections. Oh, we got to do appraisals. It's like, I don't even know if this house is worth anything anymore or it'll cash flows because you're just looking at projected times. And I think it's important to do all these three aspects. But even when taking actions, as long as you have the support of your mentors, your friends, your colleagues, people who are in the industry, and support of your own personal knowledge of, hey, I have learned this has happened before. So now I could pivot just in case something bad happens.
Yeah, absolutely. You can always learn from your mistakes, but if you never kind of get started to begin with, there's just no way to avoid it, right? I mean, I've made mistakes. I've had, deals where I didn't do as well as I wanted to, where I lost money or, something happened unexpected that was a challenge, caused delays. I mean, I'm still alive and still found a way to, get it back on track and do better and grow. And there really isn't any avoiding. There's no starting perfectly. It's just not possible. It's almost, it's a journey. And so every bad thing comes with, a good thing as well. And you're just growing and learning. Absolutely.
Speaking of just growing and learning, it seems like you're working a lot. Do you have, what do you do on your personal time? Like, how are you kind of separating between personal and business? You start putting the word overhead in this podcast. It's like something personal now. It's like so business technicalities here. But How do you separate personal from business in today's environment?
Yeah, I mean, I probably don't do as good of a job of that as I could be. Again, I'm not perfect either. I love what I do, and so I do work a lot, but I'm lucky in life. I have an amazing family and friends that I spend time with, that I wish I could spend even more time with, but I take every opportunity to do so, and I try to just say yes when there's an opportunity to do something non-work related, not to overthink it. There's always time to do more work later, but I live in a city. I can go out and about and meet new people all the time. I'm so grateful for that. I'm so grateful that I have family close by, that I have friends that have been in my life for years that like to travel and do activities. And I just try to, as much as I get wrapped up in work, if an opportunity comes along to, go spend time with family or friend, and just say, okay, yes, doesn't put the work down, don't get in my head about it, just go. And, again, I'm not perfect, but I do that as much as I can.
Do you go on a complete monk mode when you're hanging out with, if you're traveling, for example, do you delete your emails and, well, not delete per se, but not have access to it? Do you just cut off
Working
business?
On that, I think, trying to get better at that. I've definitely gone through periods where I'll, delete certain apps or try to cut things off. I do really try to, at least in the moment, even for an hour at dinner or, at an event or something like that, try to just put the phone away, even if it's not an entire week or an entire day, even just for an hour. That helps a lot. And I'm building up to the ability to be able to put down my laptop and my phone for an entire week or an entire month. That would be great.
Yeah,
But
yeah.
even just to be able to do it for an hour. So I think it's important to be able to be present.
Yeah, absolutely. I started doing this just recently. Back then I used to delete my social media on the weekdays and then turn back on the weekends. Now I completely just shut off between 8 o'clock at night up until 7 in the morning, and that's like complete like phone shut off.
Yeah.
And sometimes when it wakes up, like getting all these notifications, or sometimes like, hey, why haven't you got back to me? I was like, I shut it off by 8 o'clock. But it does help a lot, especially investing time with your partner and investing time with your friends, and most importantly, investing time for yourself. And that is important because you get so distracted in many different things, whether that's business, whether that's social media, whether that's people trying to reach out to you, and you just need that time to just reset and then just get ready for the next day. And I think that's very important.
Yeah, absolutely. Yeah, we all do the best that we possibly can, but I think if you're just aware of it and, make an effort to try to strike a balance, it's never going to be perfect, but it's just about making the effort, I think.
Yeah, yeah. So what's the future like for you now that you have these yearly goals? You probably know this on top of your head. What's next for select development? Right?
Yeah,
Commercial.
Select Redevelopment is the development side of the company, and then Select Commercial Advisors is
Select
the
Commercial.
brokerage side. And both companies are just excited to continue being here and continue growing. I do see us doing more business in the suburbs. Again, we've historically done a lot of business in the city of Philadelphia, so looking forward to expanding, continuing to expand regionally. And also continue to grow and develop our team. Again, we are a small company, and I do intend to stay small. I like to be a boutique shop that is local and can actually get together in person and work at that level. But we do still want to grow, add some team members, continue training and developing the people that are on our team, learning and growing ourselves. And so, we're excited to continue being here and continue being active participants in the market and seeing what the next year to 5 years to 10 years brings.
Yeah, well, I hope to see your team to grow, because anybody that's working, with you, it's just amazing. You have a wealth of knowledge that if I could just take in, that's why we're doing this podcast. It's like if somebody's working, as an aspiring real estate, agent, and just to grasp your knowledge of what you have learned the past 5 years is truly a really great opportunity for a lot of people.
Thank you.
I asked this question. Usually, the reason I started this podcast was because of continuous improvement, and that's what the name Kaizen comes from. It's a Japanese term, means continuous improvement and change for the better. And I asked the same questions to all the guests, past and future. What are the things that you're doing on a daily basis, whether that's daily habits, systems that you put in place for yourself that continue to move you forward, that you think other people can help, that benefit other people?
Yeah, I guess there's so many little things, and I'm still looking for tips myself, or what can I implement. But one thing that's always worked for me and that I implement every single day is simple calendar blocking. As basic as that sounds, whether it's breaking up my day as far as business and what I need to get done work-wise, to my personal life and time with friends and family, if I make an effort to make sure that every day, beginning and end of day, I'm looking at that calendar and I'm saying, not so much, I don't get very specific on every single task, every single item. I have meetings and things like that, but I just try to block off time and say, all right, this 2-hour chunk, this 4-hour chunk, I'm working. This time over here, I'm spending with family. This time over here, I'm doing something for myself. This time here, I'm going to the gym. Just putting it on the calendar and being forgiving with myself that it's not going to go perfectly all the time. But what I like to do every day is I spend the time in the morning to look at what I have planned and then move things around. If I need to move a work thing for a personal thing or vice versa, that's okay. It's just the habit of putting it on the calendar to begin with. And I don't just do this, I don't wake up every day and decide. I have it laid out how I want it to this entire year. If you go 6 months forward in my calendar, it's already blocked out because I do it on automatic,
Okay, like a
blocks.
repeat.
Like repeat, yeah. Every Monday from this time to this time, I'm gonna put in my calls, and this time I'm gonna do my market research, and this time I'm gonna do the gym, whatever I want to do. It's blocked off on the calendar in some type of vague template that I think will work every week. And then at the top of every week, the top of every day, I shift it as I need because life just changes all the time. But at least it's there as a foundation. And I know that enough time exists in the week to do all the things that I want because it's right there. I can't go back and tell myself, well, I didn't have time. Look, it was on there. And if it didn't happen, it's because, okay, maybe this week got busy or whatever. That's okay. But I'll just try it again next week. It's there again. And I know the time exists. So it's just a matter of adjusting.
Yeah, absolutely. A little bit of structure and a little bit of flexibility goes a long way. I used to do that. I used to be that person of like just my calendar is like a full-on rainbow, and at the end of the day, it's like it gets pretty exhausting, and sometimes it's downward like just depressing because of the fact that like, oh, I'm supposed to do this, but then I end up not doing that, and oh, there was traffic for 1 hour. So I think having some sort of buffer in between, the time block sessions, just in case something does happen, or you want to make a phone call for a family member because some meeting is that gone bad or something like that, you have that buffer time. And I think that filling up your calendar is a good thing, but filling up your calendar based on your energy levels and not necessarily on the timing aspect. It's like if I want to do, if I want to work out from 7 o'clock in the morning to 8 o'clock, 8:30, but I know that I'm still sleepy and drowsy at that time, then
it's not going to happen.
Yeah, don't put it on your calendar. Like, your circadian rhythm and how your body feels. But I think it's really important to manage your calendar based on energy levels as well.
Yeah, and I'm always striving to improve my energy levels and be healthy and do all those things, but setting up something that's realistic is important to your point. If I put on there that I'm going to do, 30 hours of cold calls a week, well, that's just not going to happen. It doesn't matter if I put it on the calendar. I'm not going to do that. I'm going to get fatigued and I'm going to get tired or frustrated. So blocking off things in 1 to 2 hour chunks and having space in between them and just saying like, look, there's out of a 40-hour work week, 10 to 20 hours of it is pretty structured, and then there's some flexible time in between, and I can move things around, making it achievable and realistic. And then you can set yourself up to exceed your goals. Like, wow, I actually did more hours than I thought, rather than set myself up with some unrealistic, expectation of what I can get done in a day and constantly feeling like I'm failing. That's a terrible way to go about your day. So I try to make it very realistic, and then I'm okay with, moving something forward to the next day if I didn't have time, but maybe recognize that the reason I didn't have time was because I accomplished something else today. And I retrospectively put that into my calendar that I actually ended up doing more of one thing and less of the other. And yeah, just being kind of reasonable and understanding and forgiving with yourself.
Do you journal too? Just out of curiosity.
Don't really journal. I'm definitely like a notepad person though. I wouldn't call it journaling, but if I am at a point in the day where like, yes, I know what my tasks are in my calendar, but I'm just having thoughts about things I need to get done or things that I'm wondering about or ideas. I need the pen and paper. It's not enough for me to log everything.
Yep.
Yeah. I just the process of like, even if it's writing out a list of things I have to do today, writing out a grocery list. I know it's like simple stuff, but handwriting stuff I think helps me process a lot. So I wouldn't call it journaling, but I just kind of like to have that space, just like a nice clean piece of paper and a pen and just like, okay, do I need to, think through some ideas right now, flip a page, work on something else. And it just gives me a little bit of, ability to process.
That's awesome. So you don't have a paper calendar?
No, I have my Google Calendar, but I always have I just buy notebooks all the time. So I just always carry around a paper notebook. And if I'm in a meeting with somebody or if I'm just sitting there in between tasks and I need to like get ideas out, I like the handwritten process. And then of course, that needs to make it into a virtual world at some point if it's going to happen, but not everything needs to translate. I know what needs to be on my calendar and I know what is, I'm okay with just having like, oh, that was just kind of a thought exercise and I can, move on from that.
Yeah. This is kind of off topic, but have you ever heard of the Rocket notebook?
No.
So the Rocket notebook is I think it's called Rocket notebook. It might be something else, but it's basically like it looks like a notebook. It's very small and very thin. and I think you can write stuff down and then you turn into a PDF.
Oh, okay.
So that is something that someone gifted to me before, but then I like just the feeling of, because there's specific pen for it, and then you could erase it and things
Oh,
like
that's cool.
that.
I think I have seen that. It's like a little tablet almost, and
Yeah.
you get the free form writing, and it can like turn it
Turn
into
to like a
text or
PDF.
something.
It's super interesting, and personally, I never done it. When I was in construction, I like to just having that, the yellow notebook
Yeah.
with the pen and just write stuff down and then flip them over. I just enjoyed that flipping over. It's
I
like,
do too. I think it's meditative. I don't think you can replace it with anything. Like, I don't know if that's just, if the next generation will even be using writing. But I also was an artist as well. I went to art. I took art classes my entire life, and actually went to college for graphic design before I switched into the clinical research field. And so I think it's just there's something about the handwritten. That maybe it's meditative in and of itself, even
Yeah.
if what I'm writing is like some boring list of like to-dos. it's just the experience of flipping the page and
wow.
yeah.
So you're very creative. You know numbers. You can do a lot of research.
Do it all.
Do it all. Speaking of do it all, where can people find you, Sam?
I am pretty reachable via email or LinkedIn. I'm very responsive on my LinkedIn messages. Find me there. We have Instagram as well. Message me anytime or email info@select-ca.com. I check my email all the time. And so I'm fairly reachable. So reach out like any of those platforms.
Awesome. You can be reached just about anywhere, and you can
Yep.
provide so many different values for many other people.
Yeah, happy
Awesome.
to.
Well, Sam, thank you for being on the Kaizen Blueprint podcast, and we'll see you on the next one.
Thanks for having me.
Awesome.